Welcome to the Possible Promise podcast, where we break down the complexities of finance and point the way to financial success. Today is October 24th, 2020, and this is episode 18, The Benefits of a Delta-Neutral Portfolio. Welcome everyone to the podcast. I am your host, Brandon Oliveris, and I am here once again with our co-host, JC. Happy to have you on.
Hey, how you doing?
Good.
How you doing? Yeah. Great week in the markets once again.
Crazy week this week. Yep. Unfortunately, Christine couldn't be with us. She had to go to a wedding, but we're excited to have JC on again, so this will be fun. So it's been quite the week this week. I think we'll have a lot to discuss.
It's been a crazy week, and that's going to continue with the earnings that are going to come next week. Next week is a big week. There's going to be names like Netflix, Facebook, Apple doing their earnings, so that's going to be interesting. I
think something like, was it a quarter of the S&P had earnings this week or something I heard?
Yeah. Literally. Yeah.
So that's pretty nuts. So with that, let's see. Let us do the week in review. We'll do that first, and then we'll go on to our topic. So now we shall do the week in review. So this was quite the week. We had a down week, but it feels like just barely. I mean, the feel of this week was just sort of up and down and up and down.
Yeah, it was mainly this. It opened at the beginning of the week at 349, the SPY, and closed at 346. So not that much,
down,
but we saw some. Yeah, we saw some real volatility. But with this type of market, when it's like that much in a range where, you can, and that's where you can really take advantage, such as, neutral strategies, and you can, sell iron condors or sell, short strangles,
right.
And you can really make good amount of money with that.
Oh yeah, definitely. That's what I did this week. I've had on an iron condor on SPY and IWM since the beginning of the month, and it took a while to profit because it was kind of, the market's been going up the last few weeks, but this week was a great week for my iron condors.
That's nice.
Because, the market went down and the volatility went up a bit this week, but it went down yesterday, I think. And so it's been a really good week for my iron condors. And then
that's nice.
Yesterday, I lucked out, and I rarely do this. I know it's super risky, but I sold a 0 DTE put credit on SPY, like really far out of the money, just to make a little
How much
bit.
credit did you receive for that?
I got, it wasn't very much. I got I think it was 7 cents for the spread, so it was pretty far out of the money. But
I can imagine.
Today feels like a pretty stable day, so I think I sold the 340 strike, and it felt like a pretty stable day. Nothing much was going on. I couldn't really envision anything happening, so I thought, I'm just going to try it. And I don't...
That's fair.
Yeah.
That's fair. Honestly, it's been the same thing for me. I did I just wanted to log into the TestWorks platform, but they're doing a maintenance right now, so we can't log in. But out of memory, I took earning trades on Coca-Cola, American Express, Capital One Financial, and some others that I can't remember right now, and they've all been winners.
Awesome.
I've taken my short strangles. They were only short strangles for before the earning announcement, and then after that, the moment the market opened, they all closed every time when the market opened for 50% profit, or depending. And that's where now I'm more into trying to squeeze all the premium that I can get. For example, if I see that the morning before the market opens, I see the stock that is still within my, short triangle right in the middle,
Yeah.
where I can basically make the most. I'm going to adjust my, profit target to be like around 70%, 80% to try to really get as much as I can, because if it's
Yeah.
in the middle, I might as well try to take as much profit as I can.
Right. Yeah, that's awesome. Yeah, earnings, depends for me. Sometimes I'll do them, sometimes I won't, because a few times I've done them and they've gone way out of the expected move.
But
So
you really need to look at like what is the history for the
yeah,
particular stock that you want to trade, because like it's crazy the differences between certain stock, like,
right,
and it's not, it's not a hazard why some stock absolutely don't move at all. It's also a matter, I think, of priced in information, and the more known and the more popular stock, except for the tech stocks, but like for example banks like Goldman Sachs, the thing didn't move at all. Same for Morgan Stanley,
yeah,
same for Wells Fargo. It's always the same thing. The more the more known the stock, the more there's the information that is already priced in,
right,
and
right.
the less surprise you're going to get compared to snapshots and everything, where it's like it's always insane.
Oh yeah, it's crazy. So yeah, not too much. I didn't do too much with that this week, but it was. I think the news of the week was kind of stimulus all week, and I think it'll probably be that way. And it was literally like I was following it on Twitter, and literally every hour it was the opposite. So like, oh, we're getting close to stimulus. No, we're not going to get stimulus. We're getting
Yeah,
close to stimulus. We're not going to get stimulus. And after a while, I kind of noticed that the market stopped responding. Like it was where the market would, go up if there was good news and go down if there was bad news. And then on Thursday and Friday, I think, I would watch and I would say, oh, there's good news, it's going to go up. Oh, there's bad news, it's going to go down. And it didn't. It just kind of stopped moving after a while. It
yeah.
stopped reacting.
I mean, it's super hard, honestly. Like,
Yeah,
news and the reaction on the price. Like, at some point, like with a friend of mine, we were coding basically, bots that were trying to guess what the news were going to, how the news were going to impact the markets. And it's a 50-50. Like, it's just
right.
as simple as that. And like, I don't look personally at the news or anything. I knew that there was a lot of I'd say momentum. Let's say that, let's use the word
Yeah, yeah,
momentum
yeah.
for that stimulus news, and I really didn't pay attention. I'm more concerned of the U.S. election. That's more something that is concerning me right now. Where if I have to roll out, for example, a short strangle, let's say for the December expiration, I don't necessarily want to be naked during the U.S. elections. I don't know. I don't feel it. It's like I prefer to avoid being naked, put naked call during the U.S.
Yeah,
elections.
this is going to be. I
We
think
don't know.
my opinion. I'm curious what you think. My opinion at this point, it doesn't matter as much which candidate wins, but what matters is the uncertainty. So if we come to November 3rd and we don't have an answer, as many people are expecting, I think that uncertainty will sort of really weigh on the market. I don't know if it
Yeah.
matters so much just because Biden's ahead like 10 points now, 10% across the country. So I don't know if the market cares so much anymore which candidate wins, or at least I think it's priced in a Biden win is what I've heard. But I
Yeah.
think the thing that could really weigh on it is the uncertainty. What do you think?
Yeah, no, for sure, for sure. I completely agree. It doesn't matter. I agree that it doesn't matter as long as we know, as we can almost say who it is prior to the event itself. If you can already say, okay, regardless if it's Trump or Biden, who's going to win. If you can already say who's basically going to win because we have enough information to be sure
Right,
about this, the markets are going to freak out, but on the event, during the day, it's not going to be as it's not going to be a huge surprise. That would be great though. I would love that to, the tight fight, as you say, is the biggest risk, because that's where uncertainty comes. After that, it's probably going to be a huge moment of volatility, for few moments, and after that, it's going to regulate. It's more like I remember when Trump got elected in 2016, all the defense stocks literally just went up. Lockheed
yeah,
Martin,
yeah, yeah.
they were just directly all went through the roof. And that's more for this type of impact, also where the danger lies. If you are like, for example, if you have a short iron condor, if you sell naked puts or naked calls, in certain stocks that might go up because of the US elections.
Right. Yeah, exactly. So are you trying to lessen your positions during the election then, or what are you
So it's
doing?
hard. It's hard, like, right, I think there is an opportunity part that tells me, because there are so many earnings, for example, this week,
Yeah.
it's so tempting to take those trades. And at the same time, I'm like, do I really want to be, naked during the US elections? I don't know.
Yeah.
So it depends. I'm really making sure that the trades that I'm taking, they are, I'm making those trades on stocks that are usually not moving during earnings.
Right.
And that's for me, if you look at the previous earnings, you only have this information, but at least that's something that you have compared to, that can be basically summed up to a number. I use it from a website, and that tells you from 1 to 10, and 1 being the stock doesn't move at all during earnings, and 10 being the stock moves like crazy. And that's called Option Slam. I'll send you the link. So if you want to put it in the resource section.
Option
and they basically
Slam,
tell you, Option Slam. Mm-hmm. And they tell you, with that number, how the stock is moving during earnings. So that's pretty cool, because, for example, you can see with bank stocks, as we're saying before, you can check the number. It's pretty much close to 1, which is the minimum. And you look at like Snapchat and stuff like this, they're around 8 or something, because they're super volatile. Okay. So I'm more focusing on this, but yeah, I think I'm gonna take trades still, and if I have to roll it out, well, that's why I trade small in a way,
Yeah, exactly. I'm kind of the same. I may try to. I'm hoping I can close my iron condors before the election. We still have a week or so, week and a half.
But I think that's really about it would be better to close it before, but if you're in a trade, I mean. You can't really avoid everything, and that's why we trade small. That's why we try to keep our position sizes small, so we don't get burned when there is a 3 standard deviation move, for example.
Exactly, right. So more on the economic side, I was looking at, I get a weekly summary every week of kind of some of the economic stuff. I'm not seeing too much besides stimulus, like I said, but Thursday they reported the jobless claims, and it was actually down this week. I don't know how much you follow that, but it was like 787,000 versus they were expecting 870,000, I think, for the initial claims. So that was good news, at least. I mean, it's still like super high, but it seems like things are starting to come down. So that's good news.
Yeah, no, that's for sure. I mean, it depends where, because, for example, here in Europe, it's going bad. Like, it's going bad again for a lot of countries. And yeah, like, for example, France has a curfew, so at 9 p.m. they can't go out anymore.
Oh my gosh, really?
Yeah,
wow.
that's real. So yeah,
that's crazy. I don't know if anything like that's happening in the U.S. I feel like we're so focused on, I mean, I don't know how much like in the U.S., how much people are fighting even against the masks and against social distancing.
Yeah,
so I feel like if anyone tried to institute curfew, I feel like there would be riots in the street.
but honestly, and like, French are the first ones to go out in the street whenever there is something. So
right.
like but at the same time, when they're threatening you of like, a fine or anything, then most people are going to stay inside. That's just how it is, and it's obviously there are going to be some people that are still going to go out, but mostly people are staying inside right now.
Well, that's just like, I was, like I mentioned in the beginning, there was a wedding that Christine went to today, and I was invited, and I was going to go initially. The wedding's being held outside. The reception was supposed to be held outside. Which I was more comfortable with. I mean, I've been going to like restaurants and stuff, so I'm not, too averse to going out. But the reception was moved inside because they had to move the location, and the people there aren't super strict about face masks and distancing and stuff. So I'm like, I don't think I'm going to go to this because especially where I am in Pennsylvania, there has been an increase in cases. And, going into the winter and everything, it's like, you really have to be careful. So,
yeah, that's for sure. For sure.
Yeah.
It is what it is. And, unfortunately, we can't do really much apart from trading, where we can still trade.
Exactly. Yes. Thank goodness for that.
Thanks, Internet, for that.
Yeah. I don't know what we'd do if we couldn't trade. So with that, though, that's a perfect transition. We will get into our topic for this week, which is the benefits of a delta-neutral portfolio. So I'm excited.
Huge.
Yeah, it's
huge
huge.
benefits.
Yes, I'm excited
Yeah.
about this one. This is awesome. And I remember a few months ago, this is when I wrote down this topic, actually. I didn't get to it until today. But a few months ago in your group, Options Trading 101, there was a discussion about delta neutral and people kind of saying like, oh, it's not that important and, that's not really something that's that valuable. For me, that really revolutionized how I traded when I learned about trying to keep delta neutral.
Yeah.
So, I mean, that really, because I think, well, let's start with what it is, I think, is before we
Yeah.
go into
Yeah.
the benefits. So, we've discussed in the past, the basic Greeks, the options Greeks, there's delta, and delta is basically, how far the option price will move as the stock moves, right? And a positive delta is as the stock goes up, the option is going to go up, and a negative delta is as the stock goes up, the option is going to go down. So delta neutral basically is all your options, really all your positions in a portfolio, but mostly you focus on options, amounting to approximately neutral, approximately zero. Of course, it's never going to be exact, but approximately neutral. And so the benefits, and you can speak to it a little bit, but the way I understand it, the benefit is that you're not as much looking to the direction the market's going to move because you can't really predict that, but you're more looking, especially for credit strategies, you're more looking for, as volatility contracts and, basically whatever the market does, you're pretty protected.
Yeah, yeah, absolutely. And, being delta neutral, you can do this at the scale of a portfolio, meaning that, for example, you're going to sell a put credit spread and you're going to sell a call credit spread. And, at T0, you are delta neutral. And so because you have a long and a short position. So essentially you are neutral at that time. And you can do this, but you can also become, delta neutral in terms of strategy itself.
Yeah.
And I completely agree. That's absolutely, change the way I trade, like to a point that's insane. And when you understand, that you don't necessarily have to play on the direction, but you can actually bet on the direction of the volatility.
Yeah.
That's a crazy power, and you have a lot more room. Basically, you just benefit from the volatility contraction when you're neutral. When you're using neutral strategies, that essentially means that, for example, you're selling strangles, you're selling iron condors, or you're combining, for example, credit spreads that make you delta neutral. You could also do that with debit spreads. But when you do this with credit spreads and naked options, it's going to create like this thing where you just benefit from the contraction of the volatility. And even if, for example, you sell, let's say, a naked put, a super far out of money naked put, you might not be neutral on the paper, meaning that you sell a naked put, so you're bullish. But if it's a five delta
Yeah.
put,
Like I
you
did
are
yesterday.
yeah, you are a bit neutral. So I mean, yes,
Yeah.
you're not completely neutral, but you have so much room, even if the stock comes back,
Oh, yeah.
against you. Like it's fine. You're fine, and you. In my head, naked puts, I almost put this in the neutral strategies now, because if it's you super far out of the money, you have such a safety net that it's almost as if you were neutral and you don't really care. You just have to wait, and you're gonna benefit from the time decay and the contraction of volatility, and that's really the main thing.
Right. Yeah, and I love that. I think it's really powerful, and that's the power, especially as option sellers, that we have, is that we don't have to really bet on the direction of the market, because you're not going to know. And I love how it kind of all comes down to, probability, because
Yeah.
you don't have to know the stock's going to go up, that stock's going to go down. I mean, you can do a little bit of that if you enjoy that, but it's hard to really guess or to really predict where the market's going to go and where any individual stock's going to go. You can hope it's going to go up, but you just don't know what's going to happen. So
Yeah.
when
You can't. You just can't guess on the short term. I mean, like if it was possible, to actually have an edge just based on the direction, if you can't have an edge. I mean, if there was an edge, we would know it by now. And the only edge that there is on the short term is if you try to go faster than the guy that you're competing with.
Yes.
And as a retail trader, it's impossible.
Right.
And that's only, available at a level where the nanosecond is actually something that is important. And at a
Exactly.
retail level, we're nowhere near this. We're in
Right.
milliseconds.
Yeah, so instead we can focus on volatility. When volatility is higher, we can sell, iron condors or strangles or credit spreads or whatever, and just benefit from that volatility coming back to the mean, basically. And it's you don't have to worry about the direction so much. So I love that approach. It just makes it so much easier. And I know some people, and I think Tasty Trade does a lot of this, where they don't really care what the stock is so much, what the underlying stock is. They're just looking at the probabilities.
Absolutely, and I absolutely agree on in this philosophy. I mean, when you put your faith into the probabilities and you have a delta neutral portfolio, who cares where the market is going to go? You're just
Right,
going to make money
right.
because if you're like an option seller, you're going to make money from the time decay. That's the first thing. So if the stock stays where it is, you're still making money because the time is passing and you're making money like this. That's crazy. And for example, during like whether it's earning events or just normal implied volatility expansion,
Yeah,
you know that the implied volatility is overstated. And because of this, when the implied volatility is high and you sell at that time, you
yeah,
are going to make money. And it's just a matter of time until you actually make money. And it's true that after that, it's a matter of risk management and everything. But being delta neutral is so cool, honestly.
oh yeah, I love it, and especially with the volatility being how it is now. Like I have an iron condor on SPY where my short strikes are at like let me think like 365 and 300.
Yeah, yeah,
So
that's nice.
I mean, you know what I mean? Like, and I started when SPY was around 332 or something back in the end of September. So it's obviously come against my call side a little bit, and it did, especially a few weeks ago when it was above 350. Made me
Yeah,
a little nervous, but it's pulled back since then. And you have to think. I mean, the probability of it going up, that far, that's over 5%. I think 7% actually now is pretty low by my expirations November 20th. So now with it, especially, we are 4 weeks away from November 20th, I think. So 28 days to expiration. And so with anything, what is it, less than, especially as it goes less than 30 days, it starts to decay a lot faster, right? So, and I've noticed that, like, it was kind of stable for a while. It would kind of hover around where I sold it at. But over this last week, it's really come in a lot. So, I mean, I have a huge range to operate within.
that's nice.
And I love that. And I use that strategy a lot because we just don't know. I mean, the market went up for
Yeah.
weeks, and then look at September; it went down for weeks.
Yeah.
You just
And
don't know.
one very, for example, good example is like, you can, if someone who's listening knows how to code in Python, they can
Yeah,
literally program a machine learning algorithm, just with the library with TensorFlow, for example, you can program something. And if you, for example, make it run on a stock chart, it doesn't have an edge, and you can try and you can train it as much as you want. It doesn't know where the stock price is going to go. And I've trained so many machine learning algorithms just to see
yeah,
if you could actually find an edge. But obviously no, and that it's probably not going to find an edge, but you still try because you want to know. And you can't know where the stock is going to go on a very short term basis. You really don't know. So what about selling, for example, an iron condor or a strangle? And I think it's better personally to sell a strangle because you reach your profit target faster, even though the risk is undefined. But just with this, you just benefit from the time passing, and that's pretty huge. And you just,
yeah,
even if you don't want to be naked, sell an iron condor, and you're just going to benefit from the time passing. I mean, that's huge.
yeah,
And I think it's super important when whether it's a delta neutral position or it's a delta neutral portfolio. I think it's cool, very cool to be neutral, because even if it's at a portfolio scale, it gives you in a way a peace of mind, because if you always try to adjust and try to strive for that delta neutrality, then it's going to provide you a very big peace of mind, because you know that regardless of when you look at your portfolio, when you trade, you know that you have positions that are going to benefit wherever the stock market is going to go. And you could, for example, just sell credit spreads over credit spreads. You could sell like 5 credit spreads, 5 long ones and 5 short ones. That's 10 credit spread in total. And now, you're delta neutral because you have 5 long, 5 short. And of course, the stocks are not going to move as fast or as big and everything. But overall, you're already pretty neutral.
Yeah, exactly. I'm sorry, by the way, if you hear my dog in the background. I don't know what he's...
I don't hear anything, actually. So.
Okay, good. He was starting to pant and he whined a little bit, so I'm like, oh gosh, okay. So
poor him. Poor dog.
He's probably looking out the window. I have no idea what he's doing. We have a Samoyed. I don't know if you know that breed.
No.
It's kind of like Huskies.
They're okay,
dogs.
Yeah. Very cool.
Very cool.
But you know what's crazy? Like I've done that in September. I was basically just like I've done a trial where I was just selling credit spread over credit spreads. Yeah. And I've done like, for example, I was trying to stay delta neutral. So I was just selling, if I was missing a bit of long trades, I was just selling a put credit spread. If I was missing some short ones, I was selling a call credit spread. And, I was just literally just closing winners after winners, because obviously when you have like 10 or 15 credit spreads on, that's going to go quite quickly to reach profits for some of them. Right. And I was just letting the portfolio run like this. And I was, always reloading with new credit spreads, and you are making money. You absolutely are making money. Yeah. And you take your profits. And for the ones that are going, for example, in the money, whether you roll it out directly when it's between the short strike or the long strike, or you just, let it go in the money and you close your loss and you'll take your loss. But at the end of the month, I had made a good bunch of money just by selling credit spreads.
Amazing. Yeah, that's awesome.
And just by, striving for the delta neutral portfolio. And that's always, that was the hard part, if someone is listening and who doesn't win right now, for example, tries to sell a credit spread and he doesn't know why he doesn't win, it's because you also need to reload all the time. You also need to be active in the markets, meaning that you can't, just like place trades and if you don't do anything for 1 month, you don't really have, first of all, enough sample. And you need to be active in the markets and to make that wheel turn so it can actually be some kind of a consistent thing that comes in. Right. It's hard to explain, but I hope it makes sense.
So you're saying you need to be active, you need to be placing trades.
You need to be placing trade regularly, you need to be active, you need to always send stuff in the market. So that at least you have a big enough sample that can try to represent an outcome.
Right. It's a numbers game. I mean, if you have 2 trades, they could both lose potentially, but if you have, 20 trades, then they're likelihood they're not all going to lose. The more trades you have, the closer you're going to come to that, probability of profit that whatever you trade on, 70%, 80%, whatever. Right? So it's just a numbers game. Which I love
exactly. And by the way, if anyone is listening and who's trading spreads, it's super important to close the spread prior to the expiration. Never let spread expire worthless. It's been a big thing recently on YouTube. I've seen a lot of videos around this from Project Option. Also in the money, they've been doing videos around this. And the problem is if you, for example, the after hour move might you might get a sign on this thing, and an option is that you can exercise it until the 1 hour and a half after the market close in the after hour trading. So it's if someone is exercising their long leg and your short leg is being assigned, but your long leg in the meantime during the after hour comes back and your long leg becomes out of the money, the exercising it doesn't work. The exercise doesn't work. So you're basically just being assigned. And that's what happened to some people. They lost $30,000 and $30,000 and they lost a lot of money like this. And that's super important to always close your spread and never let a spread expire worthless.
Yeah. And especially usually 50%. That's what I usually aim for. It's 50% profit or so on a spread. Is that what you
but no, I mean, even if you're in the loss, I mean,
right. I see what you mean.
Just don't let it like this, because that's what happened for Tesla, for example. Some someone let it expire worthless, but the stock moved after hour and it came back enough to come back, and the guy got a sign on the short leg, but the long leg wasn't taken in the move, so the long leg couldn't get exercised. And what happened is that the guy just got a sign, and then he had to put the margin, and because of this, he lost $30,000.
That hurts.
So that's a mistake, and like
right.
every mistake, all the time, it can be avoided. So please close your spreads.
Well, in general, expiration week is always very, very volatile. So I definitely try to close before expiration week.
Yeah. I personally don't really like staying in that. I'm never in a trade when it below, I'd say, like 15 days. I think.
Right.
I'm not often there.
Either by then it's decayed enough where you're at 50% profit, or you can just roll it forward or close it.
Yeah, or it's an earning trade, and in that, it's just like I'm also delta neutral, but it's literally a trade that I open that have less than 24 hours in that trade.
Yeah, that's awesome.
But that's the amazing thing also about being delta neutral, is that, for example, when I just sold strangle after strangle this week. I mean, for the past 3 weeks, I've been doing this on earnings. I've been selling strangles after strangles, and I wish Testworks was working right now. I could mention the stocks because I don't remember all of them. But I've done in total right now for the past 3 weeks, 13 13 earning trades. Wow. They've all been winners for the moment.
Wow,
for the moment. Touching wood.
Yeah.
and we'll see. But American Express right now and Capital One Financial were quite painful in a way, because they moved a lot actually during the pre-market, but they managed to come back in the range, and I make my 50% profit. But that's the cool thing about being delta neutral, is that you can also be so, yes, you're delta neutral, but after that you also choose what is the range and what is your range. And especially with the strangle, when you don't have to buy back to buy the long leg that is going to reduce your credit, you can really be wide, and you can really go for the 5 delta and still collect a good credit. That's pretty cool.
Well, even like, this is something I kind of want to explore more in the future possibly, but I was looking just now, you go out to like November 20th, and even on STY, even the 300 put is worth, how much I just looked at, $1.20.
Yeah.
300 put, and in my head, I mean, the chances of hitting 300 by November 20th is, I mean, I can't see it happening in any potential, like.
Yeah, no, for sure.
That's pretty rich for that far out. I mean,
it's for sure because of the US election.
Oh yeah,
there is like definitely premium right now. But that, at least let's sell it. Like that's a cool trade. I personally also don't think that it would reach 300, but that could be a definitely good trade. And with this type of things, when you sell, for example, a naked put like the 300, and you're just fine with the trade, nothing's gonna happen really. And if you just trade small, like, it's really, really fine, this type of trade.
I mean, yeah, that's nuts. And I think I just looked at it. It has an 8 delta, so it's very, very out of the money. It's very, very low probability of ending up in the money. And I mean, I can't fathom that even happening. We touched 300. I don't remember how many months ago. We haven't looked back since. So, I mean, I feel like that's something.
But for someone who, for example, when talking about delta neutral portfolios or delta neutral positions, someone who would say, for example, during a bull market or a bear market, as long as the market is trending, it's not necessarily, for example, whether a good strategy to be neutral. Well, that's why you can roll your trades also. That's why you can also roll the put up or the call down if you need to. And that's why, for example, when you trade, that's why I don't necessarily like credit spreads and iron condors, because you can't roll your trades, simply put, compared to strangles, when you can roll the put up and you can roll the call down. And if your call is being tested, then you just roll the put up. And that's something in general that people are a bit like against, is the fact of using delta neutral strategies when the market is trending. And honestly, it's fine, you just have to roll your put up if you have to. Sure. And as long as there is no violent move, you'll be fine. Yeah. That's really the only thing that hurts everyone. Is when the market is very volatile and is doing very violent moves, like what happened in February, March. That was a violent move, and that hurt a lot of people, me included.
Oh, sure. But even then, and obviously this was a crazy move what happened, but if you kind of zoom out far enough, I mean, we were at 3,300 S&P in February. And in September or August, I don't remember when we crossed 3,300 again, like 6 months later, I mean, and that's a long view, and I'm just saying, like, it came right back, and that doesn't always happen, obviously, but it's just, you know, even if you have a crazy move with a long enough time span, it's probably going to come back. Maybe not all
Yeah.
the time, but it's probably going to come back. And I
Yeah.
think that's what people miss sometimes is they just look at, oh, stocks go up, stocks go up, stocks go up. But there's an expected move, and you know it's a mathematical thing. We've talked about that before, but you know a stock moves in a range. It doesn't just go up and up and up and up. Well, depends what it is.
Yeah. Yeah.
Some
It
of them
really
might.
depends.
Some of them might. Some of them are meteoric like that. But in general, a stock is going to move in a range, and the wider you capture that, the more room you have on that. And if you sell a strangle or whatever, I mean, it's extremely likely to stay within that range. And
Absolutely.
like you
And
mentioned, like a 5 delta is like what a 2 standard deviation move. I mean,
yeah.
that's 95% likely.
That's why when you, for example, I come back to the subject of earnings because I think that's a great example.
Yeah,
As much as you never know what's going to happen, and I absolutely agree with this, and that's why you have to trade small.
right.
That should be mandatory just to trade small. And for earnings, for example, when you sell a 5 delta strangle the day before your 2 standard deviation, you can actually encompass 2 standard deviation. You have a 95% probability, and on top of that, you trade small and you have enough premium, just go for it. If
Yeah,
you find with 2 standard deviation, just go for it. Like personally now with time, I'm taking more risks, meaning
sure.
that I'm, putting my strangle more tighter. I'm making it, for example, 1 standard deviation, and now I'm more fine with rolling my trade and my put on my call depending. But like at the beginning, I know, and I think it's like this for most people, we're a bit afraid of risk, and that's
Yeah,
why you can just do a 2 standard deviation, and if you trade small, you're absolutely going to be fine, and it's going to let you have the time to get used to the trades.
right. Exactly. Yeah, that's a very low risk. Not to say it would never happen. I mean, anything. If there was, as we mentioned last time, if there was no risk, then you wouldn't get money for it.
Yeah, no, but for
But
sure, and that's the thing to understand. Like, it's probably gonna happen that the stock at some point blows up, but after
yeah,
that, you can also do the work on your side to avoid peaking stocks, regardless if it's earnings, regardless if it's
exactly.
a longer term portfolio. That, for example, like let's say that you want to sell whether a strangle or an iron candle, you want to use a new, delta neutral strategy
Yeah.
on a stock like Tesla, for example, or Nikola.
Right. Yeah.
Why going for those stocks? Those stocks are super volatile.
Yeah.
Why not choosing something like an ETF that
Exactly.
is a basket of several stocks put together? And what is going to happen is that because the several stocks are being put together, it's not as volatile as the stocks themselves. Because now we're talking about a product that is composed of several products. So it has to move slower because there's more things involved. And it's true that
Right.
except when during a market crash, everything is going to be correlated and it's going to go south very quickly. But,
Yeah.
99% of the time it's going to go pretty slowly. And that's where you have opportunities.
Right. Exactly. I mean, and that's what I do. Is I do mostly ETFs for that exact reason because a stock, any given stock. I mean, if there's some news item, if there's earnings, or if there's something random that happens that you can't even predict, like it could take off or it could plummet, and you just don't know. And so I feel like a lot more common to kind of have those big moves. But with ETFs, as you said, it's sort of all averages out, so it's a lot easier to kind
Yeah.
of see where it's
Yeah, I
going.
mean the only thing, where everything is correlated is like during a crash.
Yeah.
Like during
Oh
a
yeah.
crash, everything will go down super quickly, ETF or not, that's just will be the reality. But like, otherwise 99% of the time it averages out. And that's where the whole beauty in a way lies, is that 99% is all good, all perfect. The ETFs are not moving, and then when there's a crash, everything goes south. But it, and that's why we trade small. And when you take advantage of those ETFs, whether it's XLF, XLV, XLK, all of those,
Yep.
that's pretty cool because you trade several things at once, basically, and you allow yourself to have less risk because the thing is less volatile.
Right. Right. Like I was just looking at even the S&P this week or any of the indexes. each day you had sometimes a 1% move either way. So I think one of the days, I don't remember which one, we moved up like 1.5%. But overall, like it dropped by 0.5%. So it just all kind of evens out. It all averages out. And,
Yeah.
okay, you might have a huge up move, but you might have a huge down move the next day or the next week or something. I mean, it all kind of averages out.
I think for anyone who's listening, who's willing to try to delta neutral with a position or try to build a delta neutral portfolio, I think ETFs are great candidates because they allow you to trade several things at once. It's basically averaged, so it's going to be less volatile. And they're usually cheaper, like all the spiders like XLF, XLV, XLE, all of those, they're usually cheaper. So you can, smaller accounts can actually trade them. And, you only have benefits really, like, and you don't have the potential of news. So it's pretty cool. Like, and to try delta neutral positions, I think they're very, very good candidates.
Yeah, that's awesome. I think, just kind of a related topic to that. I don't know if you want to speak to a little bit, but the idea of being beta neutral, since different stocks are correlated differently.
Yeah. That's why the beta were, at the beginning when I was like at first getting into options, I thought honestly it was very important. I truly believed in it, and I truly tried to apply it. But now I'm not gonna say that I don't care because it's false. But I'm not as concerned, as before. Now it's like, volatility is what it is. If it becomes volatile, if there's a crash, you can try to be beta weighted, anything you want. Everything's gonna go south anyway. So, I understand the concept. I don't know if you use it a lot, but personally now I'm not really using it anymore.
That's good to know. It's interesting because I know some people emphasize it more than others, so it's interesting. Yeah, I don't focus on it too much either.
But I think, if that works for the person who's using it, if they feel comfortable using it and they actually make money, like, fair enough. Like that personally, I don't really use it. I don't really find an interest in it. Yeah. And I think it would add more headaches rather than anything, beneficial. So I don't personally use it. But if maybe I don't necessarily understand it perfectly as someone would, like, and that works for them, then that's fair,
Yeah, definitely. Awesome. Yeah, so I think it's definitely worth trying out. I know, I mean, some people don't like credit strategies as much just because they say it doesn't, it's lower profit per trade, I guess. And the losses.
Yeah, but that's what works.
Yeah, that's what works.
I wish we could like have trades with huge rewards and very low risk. I honestly really wish we could, but like, and that doesn't exist. And the only way is like that way, honestly. And as much as people can benefit also from long volatility strategies on the very long term, like, just sell credit spreads. You're just gonna help yourself, and and the universe will help you. So sell credit.
Exactly. Yeah. Well, it kind of goes back to what we talked about last time with risk management. I mean, you have a choice between, high risk, high reward, or low risk, low reward. So you know what I mean? Like that's kind of, it's up to each person how they want to balance that out. I mean, there's
absolutely
no such thing as you just said, as high or low risk and high reward. That doesn't really happen because it's it's all.
But I, honestly, as long as the person is making money, that's the most important thing. Exactly. Regardless, as long as you don't take much risk, a lot of risk relative to your account, and you actually are in the green, then like, who am I to say how you should trade? Like, you should absolutely do what works for you. Like, and that's something that I've realized. Like, some people are trading differently, and everyone has to find what really fits them. And when you find it, just keep doing as long as it's working.
Exactly. Yeah. Awesome. So, I think that's all I have to say on the subject. But I think it's really valuable because I think if people start trying that, I mean, it's just, for me, it was so much less stress when I started going delta neutral because it's like I don't want to have to predict where things are going to go. So I'd rather have a strangle or an iron condor, or just balance things out between calls and puts. Where I don't have to worry so much, where the market's going to go because you just don't know. I mean, this year
and to help to help those who might listen and who wonder exactly what strategies they can use now when they finish listening. It's whether basically a short iron condor, a short strangle, You could also use a long strangle in a way, a long straddle, for example. You could also do this in a way you don't really care about the direction. I don't necessarily use that strategy a lot, but like you could also do this. It's this type of strategy that you should use if you want to be delta neutral, meaning that you just want the stock to whether go in a direction using a long strangle or stay within a certain zone with the short strangle, with a short iron condor, for example.
Right, exactly. Yeah, that's awesome. And sometimes, I don't use it too often. Sometimes, though, I like a good calendar spread.
Yeah. Honestly, I know that you use that a lot. I don't understand why you like them. That just pisses me off, like
Really?
going into another. I don't like this, honestly. That's where we find our own style, I personally
exactly.
don't like this, but if it works, then
Yeah, I've had pretty good success with it. I mean, I like it because number one, I find it tends to move more slowly, so I don't feel like it's crazy moves every day. And number two, I feel like it has a really wide range of profitability because you're just basically counting on the short strike decaying faster than the long strike or the long leg.
maybe I should try. Maybe I should stop thinking like this and maybe try one to see how it works.
I don't do too many of them. It depends, but I do like them occasionally, and they've generally worked out well for me. So, I mean, I think the only thing is they move a lot more slowly, so that can be frustrating sometimes. Like you can go a week and it's moved up like $2.
Yeah, but it's like when you sell options very far in time, for example, 50 days out, it really doesn't move a lot, except if the volatility actually contracts. But in terms of stock moving, you're not gonna see it being reflecting on the P&L because it's so far out in time, and then the sensitivity is not there yet.
Yeah. So yeah, those are some good strategies, but I think the best one, like you said, is probably like selling strangles or selling iron condors, things like that. That's probably most common for being delta neutral.
Yeah.
So thanks for discussing this. It was a lot of fun. And
thanks for having me.
I realized I forgot to mention last time. I wanted to mention it. The Facebook group, if people are interested in discussing this stuff more, Options Training 101. So you can check that out on Facebook. And
sure.
And
we're now at 5. Wait, are we at 5,000 people now?
I think almost.
Yeah, we're exactly at 5,000 people.
That's crazy. And I remember when you announced a few weeks ago, I think it was 4,000. And I remember when it was at 2,000. So, I mean.
But it's, I remember exactly when it started picking up in 17th of August, exactly. I don't know why I started 50 people joined just at once. And then after that, from August 17th, it went from 2,000 to 5,000 now, October 24th. In 2 months.
That's crazy.
Yeah, that's mad.
That's awesome. I've said I don't have the patience for trying to manage a group like that, so I'm glad I can help out with moderating it.
But thank you for helping. And now now it's different. Now it's not a matter of patience like at the beginning where it was painful because no one was spending. Now when people are spending, I mean it's a pleasure every day. Honestly, awesome. It's like basically a big room where a lot of people who like trading talk about trading basically, and that's funny.
And I think it has just real quick, I think it kind of has a reputation. I saw someone mention the other day that, it's newbie friendly. People tend to be very patient in the group. And I think you've built up a good environment like that. So that's great.
Yeah, because, you can see so much everyone, for example, for Facebook groups, when there's a toxic environment and where people are afraid of asking questions because they are being treated of, dumb people by actually dumb people too,
right.
the people that tell them that they're dumb, they're also dumb. And, that's bad. I think that goes against the thing. But yeah, apparently it seems like, everyone is enjoying and newcomers are learning a lot. So that's really cool. Awesome. I'm happy about it.
So yeah, I definitely recommend people checking out that group if you want to discuss options more. And otherwise, if you want to see the show notes for this podcast, you can go to possiblepromise.com/18. And I will have the show notes there, and I'll provide the link you gave earlier to Option Slam. So if you can send me that link, I'll put that up too on the show notes. So, and those who are listening, feel free to leave a comment. We love hearing from you. See what you think of the podcasts, and feel free to suggest topics for future podcasts because there's lots of stuff to discuss, but I think it's good to have some suggestions. So So thank you everyone for listening. I hope that you enjoyed today's podcast. And with that, we will see you next weekend for another episode of the Possible Promise podcast. Thanks for listening.
See you, everyone.
Bye.
Thanks.